Good morning, traders. We're about 90 minutes before the open on Thursday, November 2nd. We had the FOMC statement yesterday. Market reacted positively to it. We're going to take a look at the market in just a second. But first, let's take a look at our most recent pick, GPS. I've been featuring alongside because I've been expecting a market bounce in here. GPS, you can see that when the market was heading down, 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 the stock had gapped higher and it was able to preserve all of the gains. We like that. It's going to take time for the stock to digest those gains. This stock is a little bit choppy on the upside, so tends to make a move, pause, consolidate, make a move, pause, consolidate, make a move. Stair-step fashion. Retailers have been very strong recently. Retail sales have been good. Last week we got the Q3 GDP. First glance at it, consumers are spending money. So retail stocks have had a nice bid to them. I like the price action in GPS, and I would expect it to make another leg higher very soon. Another stock that I recently highlighted was SPOT. I still like that long as well. We had this compression breakout. There's your earnings reaction, B, before the open. Stock rallies up. So now it tests that breakout. Once you have a compression like this, there's going to be a gravitational pull that tries to yank that stock back into the range. During this market decline, you can see how the stock was pretty resilient. It tested that support level, and now it's been able to rally back above it. It's above the AVWAP-E. I still like SPOT. I think this could work very nicely, perhaps even selling a 160, 157.50 bullish put spread for a 50-cent credit. Try and go out as short a time frame as you can. Anything in the 3 weeks or less time frame would set up a really nice bullish put spread. So I still like the stock. I think it's going to continue to move higher. So what had me so bullish? What was I looking at? Well, there were a number of factors, primarily end of year buying. We were heading into a very bullish cycle. Where did I start getting bullish? Well, it was right in here because I was looking for that 200-day moving average to be tested once more, for it to find support above the 200-day moving average, and that would serve as a really nice launch pad from about the last week of October right into year end. That's typically when this seasonality starts. We also had the table set with a number of different events that were going to be taking place. The bid to the market tends to be strong into earnings season. Well, we had mega cap tech companies on deck to report. Amazon, Microsoft, Meta, Google. I had expected that they would have at least mixed results. A couple of them might be up, a couple of them might be down. What I did not expect was to have all of them trade lower after the number. We needed strength from those stocks. The mega cap tech stocks, there are about 6 or 7 of them that comprise 25% of the S&P 500. So they're very, very important. Well, this leg lower was unexpected, and it was a pretty substantial leg lower. And this also taints by expectations for just how high this bounce can be. And the reason for it is that I expected to see buyers way up in here. I thought that we were going to get a little retest, and from here, the launch pad wouldn't be closer to the high of the year, and we'd be able to challenge the downward sloping trend line. We'd be able to challenge all the major moving averages, the 100-day, the 50-day, the AVWAP-Q on the S&P 500. But from down here, we've got a much further distance to travel, plus, and this is the really big thing, that's heavy selling. That is some heavy selling pressure, and it's fairly uncommon to see it drifting into November. So we had a downward sloping channel. If you connect these two lines here, you'll see the lower end of the trend line. If you connect these upper highs you'll see the trading channel. Typically, when we break through the lower end of that trading channel, that is a selling climax. Plus, this week, I was expecting to see some strength just from profit taking. These shorts right in here, we're going to be getting fairly anxious. Everybody's familiar with the year-end rally. They don't want to be short into year-end. You've got the FOMC statement coming up, so why not take some profits on your shorts? That's exactly what we started to see. And after the FOMC statement yesterday, we saw some follow through. Let's look at the 5-minute chart. You can see how the early price action was pretty decent, but we gave back those gains. This was the actual reaction. So we had a little pop higher, then the market drifted lower. It found support right at this compression here, a couple tails under body. And then what happened? Well, we had some nice stacked green candles in here, but you can see this is a mixed reaction. This is not, hey, the Fed is going to pause for a long time. They are done hiking interest rates. And you would see stack green candle, massive volume, off to the races. Never look back. That's not what we saw, and that's not what we should have seen, because the Fed came out with their same hawkish rhetoric. Yeah, we're still considering other rate hikes. Because we pause this time, does it make it harder for us to hike rates next time? No, absolutely not. We still feel that the economy is on good footing. We still feel that inflation is very stubborn. Yes, we see a path for higher rates. So, this was a fairly hawkish statement, and that's reflected in the price action. You get a few of these green candles, and then the market really can't advance much higher. S&P is up about 20 points this morning. We're going to test the 200-day moving average. Could we poke through it? Sure, I think we could poke through it. We have some nice seasonality working in our favor right now, and I'm expecting the market to continue to test the upside and to continue to bounce. But what has me less bullish than I was a couple of weeks ago is this price action. It's just not that solid. So I wanted to see those stack candles right away on heavy volume. Didn't get it. This move, I believe, was simply short covering. Traders and programs could see, and here's the other tell. So let's look at the quality of the rally from the start of the week. When you hit a capitulation low, and when buyers are super aggressive, they don't hold back. Typically, we see these lows on a gap down. So what you would see, if you can envision this, is long red candle, long red candle, long red candle, long red candle, making a new relative low. Those days, it feels like the bottom's going to fall out. They're gut-wrenching. It feels like the market's never going to rally. And then out of nowhere, stack green candle, stack green candle, stack green candle, fill in the gap, blow through the high of the day, finish on the high, and that results in a very long bullish engulfing candle or a very long bullish hammer. That's not what we saw. This is kind of a probe. We try and find some support, mixed overlapping candles, really not strong selling pressure and not that capitulation, because then we get a gap up like this. So half of the gap is preserved. Are we seeing stacked green candles on heavy volume? No. There's no volume here. There is no volume behind this move. We need to see that blue line above zero. Well, did we at least stack some candles? No, not really. Mixed overlapping candles. You get a couple in here. Okay, well, the programs at this point know that they can lift the offer. They test the ask, they test the ask, they see how quickly that ask is replenished. When it's not replenished, then they know that the selling pressure is fairly light and that they can continue to move the market higher. And so those programs kick in and you see this choppy, gradual move higher. So then what happens? What happened Tuesday? Well, we get this little dip. Okay, yeah, the gap from the prior day held. There's some buying in here. But look at this price action. It's just choppy, back and forth. There aren't any stacked candles. What about the volume? No, there's no volume behind this move. This is just a bounce. That's all this is. All right, well, then let's take a look at the price action yesterday. So we've got a little bit of momentum on the upside. Programs try and rally the market and it gets slapped back down. And then we've already talked about the reaction after the FOMC statement. We go to the daily chart and we can see this is some pretty substantial selling pressure, fairly organized. So what does all this mean to me as a trader? Well, I had hoped that we were going to see some really nice stacked candles from this level here, some nice heavy volume coming in. The notion that the Fed was going to be done, perhaps even some hints that they're starting to see improvement on the inflation front, that they don't feel that they're going to need to hike anytime soon. But we didn't get that. In fact, we sold off even further. The earnings reactions, not good. We needed that tech sector to help us out. Didn't get any help from it at all. So we've got this downward sloping trend line. We had a very deep low. This is it's about a 10% correction from the high that we had back in late July, early August. So this is fairly substantial selling. And then the character of this bounce is also not what I'd like to see. So this type of price action, if it started right here, these last 3 bars, and if it had come on heavy volume. So we come down, we test that 200-day moving average. We get 3 of these on heavy volume. We blow through that AV-WAP-Q. We start challenging this downward sloping trend line in the 100-day moving average. Okay, I can get behind that. Then I start swing trading from the long side. But right now, I'm just not feeling that there's that much pent up buying. So I believe we are going to continue to float higher. I believe that we're going to see light volume conditions. I'm not quite sure how high we'll get. We should be able to get through this 200-day moving average. Let's put up the 100-day moving average. You can see how that comes into play at about 440. Could we get there by the end of the year? Yeah, we certainly could with some nice year-end buying. Are we going to challenge the high? I'm more doubtful of that than I was before. We need something material to drive this market. We have earnings season starting to wind down next week. That wasn't the catalyst. We got the Fed. They're still in tightening mode. That wasn't the catalyst. I don't know where any other possible catalyst could come from. So my suspicion is that we're going to see this choppy move back up to maybe the 100-day moving average with retracement. Get a little rally, get a little pullback, get a little rally, get a little pullback. And you can see during this decline, we did have some nice volume in here. So when we were getting these sell-offs, it came on pretty heavy volume. So I wish I had better news for you. I'm still bullish. I'm not as bullish as I was a couple of weeks ago because I had already expected this bounce to be well underway and for us to be up in this area, not down in this area. That would have shown me that there was some buying conviction. So yes, I like the price action right now. I think we get through the 200-day moving average today. We're going to see some follow through to the upside, and we're going to take a look for some bullish stocks. I'm going to go into green royal flush, and the one thing that we can glean from our searches is that when we should be bearish, our bearish searches are loaded with candidates and results. And when we should be bullish, the bullish searches are going to be loaded with candidates. Well, what we've seen in the last couple of weeks was that there were hardly any bullish candidates in our searches. The bearish candidates, overflowing. Tons and tons of them because we had lots of selling pressure. So the searches were telling us which side of the market we needed to focus on. And right now, when we're looking for longs, it's hard to find great longs, and you're really forced to find stocks that have treaded water during the recent market decline, as opposed to what we normally look for, which is strong trends, breakouts through technical resistance, breakouts through horizontal levels, breakouts through downward sloping trend lines, breakouts through major moving averages. Right now, we're pretty much trying to find stocks that have not gotten beaten down during this market decline. So I'm going to go to the first stock on the list. I'm going to have to conclude this video. I like Netflix a lot. I think this stock is going to move higher. So what has me so bullish on it? Well, first of all, we get this drift lower. This is all pre-earnings announcement. We get the earnings announcement here after the close on October 18th. Boom. Stock rallies up huge. So what happens on a move like this is that you're going to have some of these buyers that were down in here, stock gaps up, they're bullish on it, but perhaps they're not as bullish, and they start to take some gains on this nice move and unload some stock. And so that selling pressure, it's constantly a bid check when you have a gap of that magnitude. This red line is the AVWAP-E, and you can see how the stock was above and below it when the market was getting pounded. So it's been able to preserve all the gains from this gap. That is a bullish sign. And now we can see that the stock is able to get through this horizontal resistance right here. Let's see what other resistance it's been able to move through. This is a significant downward sloping trend line that dates all the way back to July 19th. And you can see how the stock has been able to break above that. So we've got this compression after this big gap. The gains have been digested. The buyers are still interested. Now they're starting to move the stock higher through this downward sloping trend line. I like it. I wish we had better volume, so I'll be watching for the volume to pick up. Let's put up the N5 chart on Netflix. We can see little spats of volume in here. Yesterday was the FOMC statement, so yes, you're going to see light volume during the course of the day. Traders are going to be relatively passive, but we did see some pretty decent volume pickup on the stock later in the day. On that daily chart, let's put up the major moving averages. Let's see where they come into play and see if the stock has also been able to move through some of those. And there you can see that the 100-day moving average has been breached to the upside. Excellent. So we've got lots of technical reasons to like this stock and to like this breakout. So today, with the market indicated 20 points higher on the S&P 500, we'd like to see this stock blowing through this little resistance level. Well, it's support now because we're through it, and we want to see the stock continue to grind higher from this 420 level. I believe it's going to do that. It's gotten through a number of different resistance levels. So as far as the overall market, we need to be careful of this 200-day moving average. We're going to see a gap higher. We want to make sure that that gap higher holds. It's going to be tested. So you get this gap up. What do we want to see during the course of the first hour of trading? That's my proprietary indicator. And there we're going to be able to see that it's going to start in a bearish cycle. So it's going to pull back and pull back. We want to see those gains from the market hold early during this bearish cycle. If they can, then we've got a chance to grind higher. And once we get through that 200-day moving average, we should see the momentum build. So this is what I'm looking at for trading today. I am mildly bullish in here. I'm not as bullish as I was 2 weeks ago, but I do still think that we're going to see a nice grind higher Focus on those really strong stocks that have been able to tread water while the market has been lower. Thanks so much for watching. I am going to be doing a video Sunday night. We will see you then. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.